Welcome back. Today, we're diving into a hot list of stocks and cryptos, from Bitcoin mining to biotech, and even a meme coin. Are these worth buying or just hype? We'll break down each one. I'll give you my honest analysis on BMNR, RTL, PDN, HFT, METIS, ARB, and MOG. We'll explore fundamentals, charts, and market sentiment to help you make informed decisions. Let's jump right in. First up, let's dive into Bitmine Immersion, ticker symbol BMNR. This company is making waves in the world of Bitcoin mining by focusing on a cutting-edge approach, immersion cooling technology. Unlike traditional air-cooled mining rigs, which can be noisy, inefficient, and prone to overheating, BMNR's immersion cooling submerges mining hardware in a special non-conductive liquid. This process dramatically improves heat dissipation, allowing the machines to run at higher speeds and with greater stability. The result? More efficient mining operations, lower maintenance costs, and a significant boost in overall performance and profitability for miners. Immersion cooling isn't just about keeping things cool, it's a game changer for the economics of mining. By reducing energy consumption and extending the lifespan of expensive mining equipment, this technology helps miners squeeze more value out of every dollar invested. In an industry where margins can be razor thin and competition is fierce, these efficiency gains can make all the difference. BMNR's systems are designed to be scalable, so whether you're running a small operation or a massive mining farm, their solutions can be tailored to fit your needs. What sets BMNR apart is that they don't just use this technology for their own mining, they also provide immersion cooling solutions to other miners. This means they have a dual revenue stream, mining Bitcoin themselves and selling or leasing their technology to other players in the industry. In a market as volatile as Bitcoin, having a business model that isn't solely dependent on the price of the cryptocurrency can provide a measure of stability and resilience. Their stock, like many in the crypto sector, can be highly volatile, but their diversified approach helps cushion some of the ups and downs. For investors, BMNR represents a leveraged bet on the future of Bitcoin and the broader blockchain ecosystem. But before jumping in, it's crucial to look under the hood. Key considerations include the company's financial health. Are they profitable or burning through cash? What's their competitive edge? Do they have proprietary technology or patents that set them apart from rivals? And how strong are their relationships with major clients or partners in the mining industry? These factors can make a big difference in the company's long-term prospects. BMNR operates in a highly competitive space, going up against much larger and better-funded companies. It's important to assess the strength of their intellectual property. Do they hold key patents that could give them a lasting advantage? Also, look at their business contracts and partnerships. Are they securing long-term deals with major mining operations, or are they mostly serving smaller, less stable clients? These details can help you gauge the company's staying power in a rapidly evolving industry. If you're bullish on Bitcoin's long-term potential and comfortable with the risks that come with emerging technologies, BMNR could be an intriguing speculative play. The company's fortunes are closely tied to the price of Bitcoin, but their focus on infrastructure and technology gives them a unique angle. As Bitcoin adoption grows and mining becomes more competitive, demand for efficient, cost-saving solutions like immersion cooling is likely to increase. Remember, investing in BMNR isn't just about betting on the price of Bitcoin itself, it's about investing in the infrastructure that supports the entire network. As more institutions and individuals get involved in crypto, the need for robust, scalable, and energy-efficient mining solutions will only grow. Companies like BMNR are positioning themselves to be at the forefront of this shift, providing the backbone for the next generation of digital finance. Of course, with high potential rewards come high risks. The crypto sector is notoriously volatile, and companies like BMNR can see their fortunes swing wildly with the market. If you're considering an investment, think about your risk tolerance and portfolio strategy. For many, a small position in a company like BMNR can offer exposure to the upside of Bitcoin mining innovation, while limiting downside risk. As always, do your own research and consult with a financial advisor before making any investment decisions. Next up, let's take a closer look at Artelo Biosciences, ticker symbol RTL. Artelo is a clinical-stage biopharmaceutical company that's working at the cutting edge of medical science. Based in California, Artelo is focused on developing innovative therapeutics that target the body's endocannabinoid system. a complex cell signaling system that plays a crucial role in regulating a range of physiological processes, from appetite and pain to mood and memory. This company is not just another biotech startup, it's aiming to address some of the most challenging and underserved medical conditions out there. Artelo's research is centered on creating drugs that modulate the endocannabinoid system, with the goal of treating conditions like cancer-related anorexia, post-traumatic stress disorder, PTSD, and chronic pain. These are areas where current treatment options are often limited or come with significant side effects, so there's a real need for new solutions. Their lead drug candidates are designed to offer hope to patients who have few alternatives, and the science behind these therapies is both promising and complex. In the world of biotech, everything rides on the success of clinical trials. These trials are rigorous, multi-phase processes that test a drug's safety and effectiveness in humans. Each phase is a major hurdle, and only a small percentage of drugs make it all the way through to approval. For Artelo, positive results could mean a breakthrough for patients and a major leap forward for the company. But setbacks are common, and the path to approval is rarely straightforward. Unlike established pharmaceutical giants, Artelo doesn't generate significant revenue from product sales yet. Instead, its value is tied almost entirely to the potential of its drug pipeline. Investors are essentially betting on the future success of these experimental therapies, which means the company's stock price can be extremely volatile, swinging dramatically on news of trial results or regulatory updates. If Artelo announces positive clinical trial data, the stock could surge overnight, rewarding early investors with significant gains. However, the opposite is also true. If a trial fails or is delayed, the stock can plummet just as quickly. This high-risk, high-reward dynamic is what makes biotech investing both exciting and nerve-wracking. When you invest in a company like Artelo, you're not just betting on a single drug. You're betting on the expertise of their scientists, the vision of their management team, and their ability to navigate the complex world of drug development and regulatory approval. It takes a combination of scientific innovation, business acumen, and a bit of luck to succeed in this field. The bull case for Artelo is built on promising early clinical data, a strong scientific rationale, and the potential to address unmet medical needs in large patient populations. If their therapies prove effective, Artelo could become a leader in cannabinoid-based medicine and deliver life-changing treatments to patients who desperately need them. On the flip side, the bear case highlights the many risks: clinical trial failures, ongoing financial losses, and the threat of competition from larger, better-funded companies. Any of these factors could derail Artelo's progress and put pressure on its stock price. Ultimately, investing in Artelo Biosciences is like buying a ticket in the biotech lottery. The potential rewards are huge, but so are the risks. Only invest what you can afford to lose and make sure you understand the unique challenges and opportunities that come with early-stage biotech stocks. Now, Professional Diversity Network, ticker PDN, focuses on diversity in the workforce. They connect employers with diverse candidates through niche job boards and events. The DE&I trend is strong, but competition is fierce with giants like LinkedIn. PDN's success depends on execution and differentiation. Key metrics: revenue growth, client retention, and user engagement. Recent partnerships or tech advancements could impact their growth. It's a show-me story. Watch for consistent growth and profitability. Entering crypto, Hashflow, ticker HFT, is a decentralized exchange with a unique RFQ model. It offers guaranteed pricing, eliminating slippage and front-running. HFT is a governance token, allowing holders to shape the platform's future. The use case: better execution for DeFi traders, especially large ones. Success depends on capturing market share in a competitive DEX landscape. Key indicators: trading volume, user growth, and team innovation. HFT is a solid project with a clear niche, but it's a competitive bet. Next, METIS, ticker METIS, an Ethereum Layer 2 scaling solution. It addresses Ethereum's high fees and slow speeds with optimistic rollups. METIS focuses on decentralizing the sequencer, enhancing resilience and revenue sharing. Adoption is crucial. Look at the ecosystem and total value locked. Success depends on Ethereum's growth and METIS's competitive edge. The METIS token is used for fees and staking, adding utility. METIS is an underdog with potential, but it's a high-risk play. Arbitrum, ticker ARB, is the leading Ethereum Layer 2 solution. It offers low fees and high activity, with a vast ecosystem. The ARB token is for governance, controlling Arbitrum's future. Critics note the lack of direct fee sharing, but governance is valuable. Investing in ARB is a bet on its continued dominance and ecosystem strength. It's a conservative choice in Layer 2s with lower risk but also lower explosive potential. Finally, MogCoin, ticker MOG, a meme coin on Ethereum. It's pure speculation driven by social media and community hype. MOG's value is tied to internet culture, not fundamentals. Risks include extreme volatility and potential scams. It's a gamble for those seeking lottery-like gains. Only invest what you can afford to lose and treat it as entertainment. Let's take a step back and recap what we've covered so far. First up, BMNR stands out as a speculative play in the world of Bitcoin infrastructure. This company is betting big on the future of Bitcoin mining, investing heavily in the technology and facilities that power the network. While the potential rewards could be significant if Bitcoin adoption continues to grow, it's important to remember that this sector is highly volatile and subject to regulatory changes, energy costs, and the unpredictable swings of the crypto market. Next, we have ARTL, a biotech company that represents a high-stakes gamble. Biotech is known for its potential to deliver breakthrough innovations, but it's also fraught with risk. Clinical trials can fail, regulatory approvals can be delayed, and competition is fierce. If RTL succeeds, the upside could be huge, but investors should be prepared for the possibility of setbacks along the way. PDN, on the other hand, is riding the wave of diversity, equity, and inclusion trends. This is a space that's gaining traction in the corporate world, but it's also becoming increasingly competitive. PDN faces the challenge of differentiating itself and maintaining relevance as more players enter the market. HFT is carving out a niche in the decentralized finance, or DeFi sector. Their solution is unique, aiming to address some of the pain points in the current DeFi landscape. However, the market is crowded, and standing out requires constant innovation and adaptability. METIS is an underdog in the Layer 2 blockchain space, but it has shown real potential. With a focus on scalability and user experience, METIS could become a key player if it continues to develop and attract new projects to its ecosystem. Arbitrum, by contrast, is already considered a blue-chip leader among Layer 2 solutions. Its strong developer community, robust technology, and growing adoption make it a favorite for many in the crypto space. Still, even leaders face challenges, from technical upgrades to competition from new entrants. And then there's MOG, which is all about meme speculation. These assets can skyrocket on hype and community enthusiasm, but they can also crash just as quickly. If you're considering MOG, be aware that it's driven more by sentiment than fundamentals. Each of these assets comes with its own unique set of risks and opportunities. It's crucial to understand how they fit into your overall investment strategy and to be honest with yourself about your risk tolerance and investment goals. Diversification, research, and a clear plan are your best tools for navigating these markets. Remember, nothing in this video is financial advice. The markets can be unpredictable, and it's essential to do your own research before making any investment decisions. Take the time to dig deeper, consult multiple sources, and never invest more than you can afford to lose. Thanks for watching. We hope this breakdown helped clarify the landscape. Let us know your thoughts, questions, or experiences in the comments below. And don't forget to subscribe for more insights and updates on these fast-moving markets.